Well, we're kicking off this Monday morning. The futures are in the red across the board fractionally, but still in the red. Now, you say since the pandemic started pretty much, the Dow, the S&P, and the NASDAQ, they seem to be tied together, moving in tandem. But more recently, you say that pattern is broken and individual names, individual stocks can move the markets or move in indices. So, of course, we're looking ahead to earnings. We saw the big names reporting their earnings today. Is there any one report that can move the market up or move it down? Any one report that can be a major catalyst?
Not necessarily. There's a ton of companies that are set to report this week, as you guys just got through mentioning. I think it's 72 is the exact number. So there's quite a few reports from quite a few companies that will likely actually move us either off of this, red that we're seeing so far this morning or exacerbate it. But what we are especially focused on and especially surprised by so far is the strength of the retail sales numbers that we've seen, right? We've seen the spending data out of Visa and MasterCard that suggests that through Q3, we actually had pretty strong spending in the consumer discretionary category specifically, which is a big shock to anybody who was paying attention because, we had inflationary concerns. We had all the backups at the ports. We had, all the supply chain issues and peak Delta all happening right at that moment. And you still see people are going out and spending, and especially in the retail category, which was a big surprise.
Malcolm, you just said inflationary concerns. I mean, we definitely have inflation, but as you mentioned, it doesn't seem people are that concerned. They're still spending their money out there. You mentioned that Jay Powell's recent statement that inflation may be more than transitory and that it could last into 2022, maybe well into 2022, was concerning investors. But since then, the NASDAQ and the S&P both getting about 2% after their worst month since March of 2020. Where are you seeing those inflationary concerns play out when it comes to investors?
Well, people may not feel it or may not be reacting the way that, economics tells us that they should. But if I am just looking for telltale signs, the fact that the Fed actually increased the cost of living adjustment for next year for Social Security benefits to 5.9%, for next year, that tells me everything I need to know, right? If we look at the last couple of years, it was 1.6%, I believe, in 2019 and 1.3% for 2020. And so if I look at that, that's more than 4 times that COLA for the last year, which tells me that if I am a retiree or even a pre-retiree, I should be extremely concerned and careful about how I actually draw down that portfolio going forward, right? If I just think about the simple math on it, the rule of 72, for a couple who's living off of, say, $100,000 in retirement right now, I divide 72 by 5.9%, and that tells me that something like 11 years is what it'd take for that $100,000 to only buy me $50,000 worth of goods. That's not great. That should be concerning for anybody who's younger than, say, like 90 years old right now.